Hello, everybody, and welcome. Thank you for joining. So a little bit about me first, just so you know who's talking. My name is Crystal Schultz. I am a senior manager here at the Ide-Bailey State and Local Tax Department. And I have been doing sales and use tax specifically for over 20 years, consulting and audit defense and all things sales and use tax. I did start my career as a Wisconsin Department of Revenue auditor. So little did I know where that would take me, but I really enjoy helping the clients on this side of the table. Much better than being the auditor. That's for a different story, different day. So if you have questions along the way, like Stacey said, please feel free to either take yourself off mute or go ahead and put it in the chat box. And with that, we'll get started. So today specifically, we'll be talking about the utility sales tax exemptions that are available for the senior living or residential living areas within states. So you'll see those terms interchangeably. Mostly probably residential living is what you'll hear, but it's tying back to those nursing home or independent living or somewhere in between, the senior living kind of as a whole. And many states have exemptions from sales tax specific to the utilities, for manufacturers, for the ag industry, and then also for these residential living facilities. So that's why we're having the talk today. And a little bit about what it is. So depends on the state, right? Like as you're getting into this, you'll hear me say that over and over again because the specifics really do matter. But as a general statement, the utility sales tax exemption would be available to your fuel, whether that's propane, natural gas, even firewood, and electricity that's used either as your primary residential heating fuel, or it could be electricity just for all residential areas as a whole, regardless of if it's being used for heating. And even it could go into a water exemption of sales tax on your water bill. Not all states tax these items, but for the ones that do, there's many of them that have a carve out specific to the residential use or residential areas of facility. And that goes to your home. If you're a homeowner, you're not paying tax on these things. The utility companies know that you're a resident, they're billing you as a resident. Where it comes into the commercial entities being invoiced and being taxed is they don't know beyond your business name or your commercial entity name that you have residential use areas. And that's your job as a business owner to tell them that, to tell the utility company or to tell the state that, wait a minute, X percentage of my facility, or I qualify, we all qualify as residential use based on what we're doing. But again, because you're being invoiced commercially, that's the why behind why you're being taxed in the first place. We have that obligation then to go the next step. So that's that residential use area. And residential customers can include apartments or those independent living areas. They can include intermediate care facilities. Many states even include nursing homes. Some do not, and that's where we get into some of those specifics and the specific facts based on the state. Some of the states view a nursing home more as you're providing the care, and instead of that being maybe your residential living space for your residents that are there. When we're talking about sales tax, there's always nuances. So I wanted to go through just a few of the various kind of general ones. And that's how we're having to talk today on very general ideas because, again, every state is different. So the qualifiers and the rules, the laws, the statutes, they vary by state. What we do is we start with a residential utility exemption by statute, where it goes back to that homeowner exemption, where you and I as homeowners are not paying sales tax on our utilities. From there, we expand that residential use into what the state allows. How far does the state have guidance to allow it all the way to nursing homes? Or are they bringing it back a little bit to saying maybe the independent living apartments would qualify, but once you get to nursing home, like I said, maybe it won't. Again, depends on the state. So you'll hear that with everything sales and use tax. The overall answer is it depends. That's our starting point, but that doesn't mean we can't dig in deeper. So many large utility companies will issue a credit, and we'll get into that a little bit later as far as once we identify that there is an exemption, what do we do? But there's an opportunity that we can either go to the utility company to say, hey, we've been paying tax we shouldn't be. Let's go back, and depending on the state, you could go back average of 3 to 4 years to recoup that overpaid sales tax, and also start recognizing it on a go forward basis right away. Instead of having to go to the state and basically raise a flag and say, hey, state, here I am. Please don't audit me. I'm just trying to get the exemption for my utilities. It's a lot easier ask to go back, and a lot probably more efficient ask to go back to these utility companies. And many of them have a process in place already to get your required documentation in hand, know that they're comfortable that you do qualify, they can support the exemption, so they'll just issue that credit on your next invoice. Many common areas vary, like anything. So how the state treats maybe the hallways of a facility versus the dining area or a recreational area, it all goes down to, it depends on the state. We just have to look to see what guidance is out there, what rooms are all allowed within your facility, and then we do a computation based on that. That methodology is tying in all the residential rooms, all the hallways if they're allowed, the kitchen area if it's allowed, laundry facilities. We have to figure out where the state specifically draws the line, and then we can do the computation from there and know what percentage you'd be allowed as an exemption from sales tax. For the 501c3 or the not-for-profit entities and the for-profit entities, this is something that you'd be eligible for. Many 501c3 entities are exempt kind of as a blanket exemption in many states, but not all states. So we need to look at that further too. If you're one of those states as a not-for-profit entity and you have this facility, you still might be eligible, even though you might be paying sales tax on your office supplies or on some things that are very specifically carved out. You might get that exemption. This residential use is also a carve out from that. So if you're not automatically blanket exempted as a nonprofit based on your state, there's still an opportunity for this exemption. And also, again, for the for-profit entities. Also, if you are a facility that's renting your space, if you're paying that utility bill, you're paying tax on that utility bill, you're still eligible for this exemption. So you don't necessarily even have to own the property that you're operating in. Then the last bullet here is state versus local tax exemptions. Many times you'll see in the state laws or the statutes that the state has an overall exemption that they'll allow for this, but they'll specifically say the locality is still allowed to tax. So maybe your state rate is 6% and your county or your local municipality taxes an extra 1%. You'll get an eligible exemption on that 6%, but you may still end up paying that 1% tax. Again, it all goes back to it depends on the state, on the municipality that you're in. So those are all some of the nuances as we'll get into it. What we've developed at Eide-Bailly out on our website, and the link is on the address is on the bottom here of this map, and you will get the handouts. I think they're in the chat link already. But you'll see this map with yellow and blue states. The yellow states are the states in which there is a utility sales tax exemption opportunity available, but that could be for manufacturing, ag, and or residential living facilities. So we have to go hover over each state and you'll see what those opportunities are. And I'll go live to our website right now to just demonstrate that. So as you hover over Minnesota, you'll see the eligible industries, like I just mentioned. Minnesota has an exemption specific to utilities for manufacturing, for ag, and for residential living. Their refund period that you see here, in every state that's yellow will have the same format. The refund period here for Minnesota is 3.5 years, look back. So if we identify an opportunity or an overpayment that you've been paying tax at 100%, indefinitely to this point, we're eligible to go back to the utility company in Minnesota or Minnesota as a state, the Department of Revenue, and request that overpaid sales tax back for 42 months or 3.5 years in Minnesota. If you move over to Wisconsin, which is where I'm still located, our refund period here is 48 months or 4 years. And we also have that residential living exemption. Tennessee has it. You just get familiarize yourself with it. If you get to Georgia, unfortunately, there's no residential living exemption there. That may mean one of two things. You might not be taxed on your utilities as a whole already. Sometimes when we see states that may not have residential living as an eligible industry, that doesn't mean that they're forcing you to pay tax on it necessarily. It might already be carved out as a whole in the statute that the electricity or the gas is just not being taxed. So that is our website, something I wanted you to be familiar with and see since we are referencing it here. That's just reiteration of the example that we went through. So you're wondering what would we need to get started or even realize if there's an opportunity. What it would take would be sending over 1 month of your utility invoices per location. So that would be your gas, your electric, your propane, whatever you're using for heat, if it's something other than this, and that electric bill. Send that over per location. If you have a map of your facility or blueprints or a layout, sometimes that's out on the website just to show the lay of the land. That's helpful for me just to get an understanding of the overall facility as a whole and where there may be opportunities. Because again, depending on your state, we may be able to go deeper into that or more opportunities. And then also what types of residential living options are available at your facility. And again, that could just be from your website, or we could have a discussion about it just to give me a better understanding of where the law would apply and where we may be able to take advantage of this exemption. So when should we consider this? If you're not sure and you're for sure in one of these yellow states that says residential living, we should definitely take a look or have a conversation. The next one, if you're taxed at 100%, again, let's take a look at it. Let's understand why. Maybe that's accurate depending, because as a whole and depending on the variance of the state, like I said, we start out that they allow a residential exemption. From there, we really have to understand the specific set of facts that pertain to your business and then align them with the exemptions allowed by law in that state. So our starting point is the yellow state says it's residential exempt. From there, we do a lot more vetting to make sure that there's an opportunity there and then have that discussion of what that looks like. If you realize you're currently taking this exemption and you don't have a study or any backup to that of why that percentage, you have a 68% exemption and you just don't know why, we should really look into that, because under audit, they want to know that support. So we need to make sure that we're getting that support out there, having that in our hands ahead of time, because we don't want to be backpedaling and trying to figure it out with an auditor kind of just waiting in the wings for it. We like to be ahead of the game, or, God forbid the auditor shows up or asks questions or you're selected for audit. We want to be able to just say, here's our support, here's why we're taking it. That's a perfect situation. But not all things fall into place that way. So the other thing would be if your facility has recently relocated, many times you may have recognized what that exemption was at your prior facility. The utility company will just keep that tied to your account. So we have the opportunity and obligation to make sure that we're updating that. Or if you expand your facility, you add on or buy another building or change how you're operating. Maybe it used to be some common areas and now they've been made into residential living areas. That's something we should look at and possibly even update your study. Let's say you already had one in place. We want to update your study. We don't have to start over. We can expand on what is already there foundationally. So an opportunity is identified. Now what happens? As discussed, we would go through and present and discuss that proposal to you. What does it look like? What other areas do you have questions on in sales and use tax? If we can't go back to the utility company, are you comfortable in your sales and use tax practices that you don't have a liability that may be identified? Or if you do, how do we offset that? How do we present that? Or do we take it just on a go forward? And in the event somebody comes to look backwards, we know that this is an opportunity, but we also know that there may be some exposure we need to clear up. As we move forward, it may include a site visit, depending on your facility, depending on the information available. We might come and gather all the data we need, or you might be able to give that to us. And again, it depends on the state, depends on your facility. But that's something that we can discuss throughout that proposal process. Then the compilation of data happens. That's basically on my shoulders. So crunching all the numbers, crunching all the data, making sure we can support the exempt percentage based on state law, as the next bullet says. And then we go back and we're ready to file that refund claim. Most states, like I said, go back 3 to 4 years. Missouri is one that goes back 10 years currently. So that's a really rich exemption or a look back period. And typically the average is that 3 to 4 years. And then also we get to recognize that go forward exemption immediately. So we would get that exemption certificate over to your utility company, making sure that you have that in place on your next utility bill. So you're starting to see that monthly benefit and that cash flow back into your business immediately after the study is completed. A question just came up. So it says, just to clarify, my company has multiple facilities in Arkansas. Based on the map on the website, it doesn't seem like residential facilities are included. Is there any potential at this point? So if we go back to the map, Arkansas does not have the residential living facility listed, which means they didn't have it on their, as a starting point, like I was talking about. I can take a look deeper, let me take a deeper dive into it and see what might be there, or maybe why are we not taxing it? Let me take a look real quick and see why they might not. So that's something you can take offline. If you want to reach out to me privately, I can definitely take a deeper look into that for you and just see if or what potential might be there, or if there's other talking points we have for some sales tax savings. Good question. And on that was a great lead in. Any other questions? Or anything I missed? I know I have some IBLE folks on the meeting as well that have worked on these with me. So.
Good afternoon, Crystal. So many questions. Can you hear me?
I can. I know I can always rely on Mark for questions. I appreciate that.
No problem. A little about Crystal. She's, a leader in the SALT group, but really is, and she's from Green Bay, and she brings in this expertise in the utility sales tax exemption that IBLE really hasn't had. So this past year, a lot of us partners, me included, have been just picking her brain and trying to get out to our clients as much as possible that this, I didn't even know this existed until, Crystal came on board. So a couple canned questions just from what I'm hearing from other clients, but Crystal, you said you worked as auditor for a touch. Any lessons learned there about how to go about doing these studies, or can we just put a number on a piece of paper?
For sure. That's what precipitated this. As soon as I was no longer an auditor, utility studies were one of my babies, so to speak. So I've been working on these for over 11 years since I've no longer been an auditor, because I knew what holes we poked through, and I knew where we were making adjustments that were only being made because the right support wasn't there at the business level. So that's where my foundation started. That's where I knew, let's make sure we have the right support. These are definitely exemptions that these businesses are eligible for, but it's just making sure you have the right documentation. And so many times, it's, yes, I'm eligible. I don't know how to get there, and let's throw a number and see what sticks. Well, that works maybe short term with the utility company. So you start getting that exemption. But once that auditor comes by, or even the utility company is audited and they need to support, what they have for backup, depending on the state, it may not stick anymore. And we may be like scrambling to try to figure out the why. So we're in a much better position if we can be proactive on it and have that support up front. True story, there's currently clients that's being audited in Minnesota that was taking the exemption forever. They don't know why. I'm sure there was merit behind how they got to their number originally, but that person is no longer with their company. There's no backup, there's no support. The auditor came in and they're making an adjustment of $85,000 because that was the benefit they received as an exemption over the 3.5-year audit period. So now we're scrambling to try to get the support together. That's not to say that we won't be able to support it, but we don't know that exact number until the study is completed. So we're going to help offset that adjustment, hopefully get above it, but you don't know. And that uncertainty is not a fun place to be. You know, you want to have your ducks in a row as best as you can if there's opportunity for that.
And I've been doing a lot. Well, nonprofits can now get energy incentives, and I've been getting the energy incentive program kind of looped in with our nonprofit senior living, our nonprofit healthcare, museums, presidential libraries. But then this utility sales tax exemption comes up. At first, I was under the impression that, well, they're not paying tax, but that's not always the case, right?
Correct. It depends, again, back to it depends on the state. Many 501c3s are still being taxed at the state tax level or on utilities or things that may benefit the company as a whole or the organization as a whole versus what their mission is or their purpose. You know, so each state has different guidelines. So it's not a slam dunk automatic blanket in many states that they're just automatically exempt. So it's definitely something we should look at. And then further on that note too, you know, I do all things sales and use tax. So even if there's other questions of, hey, I'm a nonprofit, what am I eligible for in this state? Or, you know, I'm a for-profit, are there other things that I'm missing as I operate this type of entity? Because there's nuances in everything. You know, the meals are a whole nother ball game. That's a whole nother webinar, different discussion, different day. But, you know, and each state calls them something differently. Like I think Texas refers to retirement facilities. So they kind of loop in the senior living, independent living, all the facilities under a retirement facility, if you're over age 60, I think it is, as they qualify their meals being exempt. But it's only as good as what search term you're looking for as you're trying to dig into some of these things because they're not well publicized by the state. So we really have to dig in and roll up our sleeves and just figure out what facts align with what exemptions and make sure we're taking advantage of everything we're eligible for.
Okay, one more, and then,
Okay.
and then if anyone else wants to, you know, cut me off, please do, and raise your hand or get on. But I've been with my clients setting up free assessments, having Crystal come in and doing a quick look, as many as possible, trying to catch up on this one. So Crystal, can you just go through that process, what that looks like, and the 1, 2, 3 of that, and if anyone on the call wants just a diagnostic,
Sure.
dollars on the table.
Sure. It really truly starts with, some people are visual, so I like to go back to that too if I can find it quickly. It really starts with 1 month of the utility invoices. So send over, you know, if you're not sure, don't even worry about looking at them or trying to find a sales tax line or doing the math to see what you're being taxed. Just send over 1 month of your utility invoices. I can take a look at them quickly. We can have a discussion about the rest, the blueprints, the map of your facility. Like I said many times, that's already out on your website, or there's a brochure or something that's readily available. I don't want it to be painful to try to get this over to me to see if there's an opportunity. So that discussion really can start just off of the 1 month of utility bills, and we can go from there.
Thank you.
Yes, thank you for your great questions. Anyone else?
Well, and Crystal, there's never a bad time to do this, right? You keep preaching, gosh, you know what, it's best to know. But gosh, even if things have been sailing right along, right? You know, you could be leaving money on the table, or you may not have support in place. So there's really no bad time. There's no deadlines here. It's just, you know, we're missing out on, you know, potential refunds, right? The more time goes by.
For sure, for sure. Yes, this doesn't follow your tax deadline or your tax due dates. This is just a recurring monthly, your sales tax is recurring monthly, you're paying it monthly. So that look back period, we're losing those opportunities at the beginning of that look back period, the further this goes forward. So yeah, definitely. I mean, no time like the present, right, Jim? But whenever it makes sense is when it would be good for your company. Definitely something we can look at. Just because we look at it doesn't mean that we have to do it immediately either. We can work that out and work through those arrangements with you. What makes the most sense?
Excellent.
Great.
And then
Thank you.
to kind of build on what Mark was talking about, right? This is just one piece of our national tax office, right? So, as we get in there and we help save you some money on utility sales tax, right? We can help you assess if there are other incentives. Mark mentioned energy incentives, right? Especially for our nonprofits being able to play in that space. But gosh, you know what? We've claimed a lot of ERC for nursing home facilities or senior living, right? So there are other incentives as we get in there and say, hey, you know what? If we can help you here, maybe we can help you a few other places too, right? And maximize your benefit.
For sure. And maximize our time on site and not interfering with your business operations either. We want to take that into consideration. So the more we can do all at once and as a whole, the benefit for everybody is there. For sure.
And Crystal, just for my edification, right? This does require a site visit?
It depends. That's the standard answer. It depends. So if there's good blueprints, there's good information available, and depending on the sizing, it may not require a site visit. We want to be mindful kind of the cost benefit associated with that as well as we're looking at these proposals. So it depends. The bigger the facility, the more nuances, and again, the more nuances within the state, it may require the site visit, but there are opportunities where it may not as well. That's something we can flesh out once I understand what the facility kind of footprint looks like and what state they're in, how it applies.
Outstanding.
Excellent. Anybody else have any questions, or Jim, do you have anything else?
I'm good. And I know where you live, so I can harass you with questions.
That's perfect. That's perfect. I don't know. We're going to be getting like 20 inches of snow in Green Bay. So I don't know if you want to come harass me anytime soon.
We're getting ice in Iowa, so it's
that's not much better. That's not much better. Well, if anybody else has any questions that maybe you don't want to raise your hand or don't want to ask in front of everybody, feel free to reach out. The handout will be, I think, like I said, it's in the link, and it will be also sent out along with the recording of this presentation, probably by the end of the week or maybe early next week. So I'm available anytime. Feel free to reach out on anything sales and use tax or anything that you have a question on. I can always get you to the right person if it's not sales and use tax as well. So happy to hopefully help you today, and thank you for taking the time with me.